The world doesn't end with an explosion. It ends with a number, quiet, glowing, and red. A number that climbs while you sleep, while you work, while you tell yourself everything is fine. It rises like a predator learning your patterns, patient and certain. And one morning, you wake up and realize it's no longer a number. It's a sentence. Debt. But this story doesn't begin with you. It begins with the moment humanity learned how to create money out of nothing and chain every generation to the cost. Imagine the clock striking midnight in a city that looks like any other. Glass towers, sirens echoing through canyons of steel, the soft hum of power lines vibrating like a nervous heartbeat. Inside an apartment, a man stares at a letter on his kitchen table. His hands don't tremble, but his eyes do. The numbers, printed in black ink, are small, yet they feel heavier than the building beneath him. Interest adjustment, payment increase, balance overdue. He hasn't missed a payment in years, but the system doesn't need him to fail dramatically. It only needs him to fall behind by inches. The perfect trap is never loud. It whispers. Across the globe, similar scenes play out. Families skipping meals because the mortgage expanded like a living organism. Students staring at loans that grow faster than their careers. Governments rolling over debts so massive they distort reality itself. It doesn't matter if the victim is an individual or an entire nation. The mechanism is identical. The debt grows, the choices shrink, and freedom dissolves quietly in the background. You might think these collapses are accidents, mismanagement, bad luck, unfortunate timing. But patterns this consistent are not accidents. They are architecture. Every collapse, every crisis, every silent personal implosion begins the same way, with the belief that money is real, solid, trustworthy, something you can hold, something you can earn, something that obeys logic. But money hasn't been real for a long time. When currency detached from something tangible, it became a ghost, an idea backed only by confidence. And confidence is the most fragile resource ever discovered. It breaks before anyone sees the cracks. The doom is not a single moment of destruction. It is the slow realization that you were born into a system where debt is not a burden, but a destiny. A system that treats your future labor as collateral before you can even speak your first words. A system where every dollar entering circulation is created as debt, guaranteeing that someone, somewhere, must always owe more than they can repay. And the moment this truth becomes visible, the world around you changes shape. You start noticing the extraction points, interest rates that tighten like a noose, inflation that erodes purchasing power before it reaches your hands, wages that lag just enough to force you into borrowing. You see the lines outside banks during crises, the panicked faces on stock tickers, the desperate speeches from officials who insist everything is under control. But you understand now, the system was designed to never be under control. In this opening chapter of the world's financial story, the doom is not the collapse itself. It is the revelation that collapse is inevitable. Because the system runs on pressure, on scarcity, on the quiet suffering of millions who believe they are personally failing, when in reality, they were never allowed to win. This is the moment where fear transforms into clarity. Because once you recognize the architecture of the trap, the world no longer looks chaotic. It looks intentional. A man at his kitchen table, a family losing their home, a nation drowning in interest payments. These are not disconnected tragedies. They are different faces of the same machine, grinding forward with perfect indifference. The doom is the opening act, not of destruction, but of awakening. It is the point in the story where the viewer realizes that the collapse has already begun, not with fire or riots, but with a number that was designed to rise faster than any human being can keep up. And once you see it, you can never unsee it. Every empire believes it is different. Every society tells itself that this time the rules have changed, that human brilliance has finally conquered the ancient forces that toppled civilizations before them. But history is patient. It waits. And when the cycle resets, it does so with the same cold precision as a heartbeat stopping. The pattern begins long before collapse. It starts with ambition. Noble or greedy, it doesn't matter. An empire expands. Trade flourishes. Wealth accumulates in the hands of the powerful, who discover that the fastest way to grow influence is not through conquest or innovation, but through debt. Lending becomes a weapon disguised as opportunity. Money becomes cheaper. Credit becomes abundant. People begin to believe the good times are permanent. Rome did it when its military machines grew too expensive. Britain did it when its imperial reach demanded more ships, more troops, more control. The United States does it now, issuing promises backed by promises backed by promises, each one more fragile than the last. The pattern always deepens when the empire realizes something profoundly dangerous. It can print the very thing it owes. This is where the illusion begins. For a while, everything appears stable. Expansion continues. Markets rise. Politicians celebrate the miracle of growth that seems endless. But the engine powering this miracle is not productivity. It is leverage, hidden beneath layers of complexity that citizens are never meant to understand. In every era, there is a moment when the people stop asking how money works. They begin treating it as air, something that simply exists. By the time they notice the quality of that air declining, the damage is irreversible. Debt multiplies, interest compounds. The ruling elite assures the public that the system is resilient, that experts are in control. They always say this. Even as cracks appear, even as inflation whispers its warning, even as the cost of living drifts higher each season, like a tide swallowing a shoreline. Then comes the second phase of the pattern, denial. Governments blame external forces. Leaders insist on temporary setbacks. Citizens grow restless, but still believe the system will correct itself, because it always has. For a while, this faith delays the fall. Confidence is the glue that holds a dying empire together, but it is also the fuel that ignites the final collapse when the illusion finally breaks. And it always breaks. Whether it was Rome debasing its silver coins, or Weimar Germany printing marks until they became useless paper, or modern nations inflating currency to mask structural decay, the mechanism is unchanged. When rulers rely on money created from nothing, they create debt that can never be repaid. When debt becomes unpayable, the empire cannibalizes its own people. And when people can no longer endure the burden, the empire falls. Not from invasion, not from disaster, from mathematics, from the immutable laws of compounding, scarcity, and human desperation. The pattern is older than every government now in power. It has claimed kingdoms, republics, dynasties, and superpowers. And it continues because the same flaw lives at the core of every financial system built on promises without limits. The belief that consequences can be postponed forever. But consequences do not disappear. They accumulate. And once you recognize the rhythm of this ancient cycle, you can look at the modern world and see exactly where we are in the sequence. The past is not behind us. It is repeating itself, precisely, predictably, and quietly. History doesn't repeat itself word for word. It returns in echoes, familiar enough to recognize, but distorted just enough that most people ignore the warning. Yet if you look closely, the world today is not merely similar to past collapses. It is a mirror, polished and unforgiving. A century ago, in 1929, markets soared on credit that everyone believed was harmless. Newspapers praised a new era of prosperity. Politicians insisted downturns were impossible. Ordinary people borrowed because everyone else was borrowing. Then came the crash, a sudden implosion that exposed how fragile the optimism truly was. Compare that moment to the world today. The numbers are bigger now, colossal, almost cosmic, but the psychology is identical. The same euphoria, the same faith in experts, the same belief that growth can outrun gravity. Debt levels that once seemed unimaginable are now treated as normal, as if the laws of mathematics politely changed to accommodate our desires. The parallels sharpen when you examine households. In the 2000s, families were told home ownership was guaranteed prosperity. Banks handed out credit like candy. Borrowers believed rising prices would save them from risk. Then, 2008 arrived, a global unraveling triggered by the same leverage that had been sold as progress. Today, that leverage has returned in a new uniform. Student loans, auto loans, credit cards, buy now, pay later schemes. Modern debt is not presented as a burden. It is marketed as freedom. And millions accept this illusion because refusing it means confronting a darker truth, that their wages alone can no longer sustain the lives they were promised. But the strongest parallel of all lies in the actions of governments and central banks. In past crises, rulers debased coins, stretched budgets, and printed money to postpone collapse. Now, central banks do the same, on a scale that emperors of old could never imagine. Quantitative easing, zero interest rates, massive liquidity injections. Policies described with technical language to conceal a primitive reality. Creating money to mask a wound too deep to heal. This is precisely what ancient empires did when their foundations began to rot. They replaced real value with symbolic value. They diluted the currency to survive another season. They fed the illusion of prosperity until the public finally realized the truth, and the confidence sustaining the system evaporated overnight. Even the psychology of the masses follows the same script. First comes optimism, then confusion, then anger, then desperation. We are living in the confusion phase, where the signs are visible, but most people are too overwhelmed, too distracted, or too dependent on the system to question its stability. Prices rise, savings shrink, debts expand. And still, the narrative persists. This is temporary. Things will normalize. That is exactly what past societies believed before the storm hit. The parallel becomes undeniable when you understand that every financial crisis in history has had the same catalyst: debt expanding faster than the real economy beneath it. Today's world, with its record-breaking consumer debt, national debt, and corporate debt, is not defying history. It is obeying it with precision. What happened then is happening now. What destroyed empires is now embedded in global finance. What once took decades to unfold now accelerates in months. The surface may look modern: digital currencies, algorithmic markets, elegant charts. But beneath it lies the same ancient machinery grinding toward the same ancient destination. And once you see the parallel, a chilling realization follows. We are not approaching a tipping point. We are already inside it. For most of your life, you were told the system is chaotic, messy, unpredictable, shaped by random crises and unforeseeable shocks. But chaos is the oldest disguise of power. When you peel back the layers, when you trace every collapse to its source, a darker revelation emerges. The suffering is not incidental, it is engineered. Behind every financial catastrophe, every wave of inflation, every generation trapped in obligations they never agreed to, stands a quiet alliance: governments, central banks, and the financial elite. Not a conspiracy hidden in shadows, but an architecture hiding in plain sight. A structure so vast and so normalized that questioning it feels like questioning gravity. The truth begins with the simplest mechanism in the world: creation. Not the creation of value, or production, or innovation. The creation of money. In the modern system, Money does not originate from labor or wealth. It originates from debt. Every dollar, every euro, every yen begins its life as an IOU. When governments need to spend more than they have, they borrow. When banks want to issue a loan, they don't dip into a vault. They conjure new money with keystrokes, backed by nothing but confidence and the borrower's future servitude. And who benefits from this mechanism? Not the borrower, not the citizens, not the workers who exchange hours of their lives for wages that lose value each year. The winners are the architects. Central banks decide the price of money, interest rates, and by extension, the fate of nations. Governments, addicted to borrowing, dance to their tune. Financial institutions profit from the constant churn of debt, earning interest on money that never truly existed. Together, they form a self-reinforcing loop. Create debt, profit from debt, demand more debt. It is the perfect machine. But perfection has a cost. Every time new money enters the system, it dilutes the value of the money already in circulation. This is not a side effect. This is the design. Inflation is the invisible tax. The tax no one votes for, no one debates, no one fully understands. It erodes savings quietly, transferring wealth from the public to those who control the issuance of currency. It pushes people to borrow more just to maintain the illusion of stability. It ensures that no matter how hard you work, the finish line moves faster than your legs ever can. When wages stagnate and living costs rise, the public blames themselves. When housing becomes unreachable, they think they failed. When retirement drifts out of reach, they believe they miscalculated. But the truth is far more sinister. The system requires your struggle. If you were free, the machine would starve. Governments maintain the illusion by promising relief, stimulus checks, subsidies, welfare programs. But these are distractions, breadcrumbs scattered to keep the masses docile while the elite extract the loaf. Central banks promise stability, yet every intervention they make further entrenches dependence. Financial institutions promise opportunity, yet every contract binds you tighter. You are not participating in a free market. You are navigating a labyrinth built to ensure you never reach the center. The revelation hits hardest when you realize that crises, those terrifying moments of collapse, are not failures of the system, but resets. Opportunities for the elite to acquire assets at a discount, consolidate power, and tighten control. During every crash, wealth doesn't disappear. It moves, and it always moves upward. This is why the machine survives. This is why the cycle repeats. This is why debt is eternal. Because those who designed the system depend on your obedience. They rely on confusion, on fear, on exhaustion. They rely on you believing the world is too complex to question. They rely on you thinking the problem is you. But it isn't. The revelation is simple, devastating, and liberating all at once. The system is not broken. It works exactly as intended. Just not for you. Every system built on debt ends the same way. Not with a sudden rupture, not with flames swallowing cities, but with a quiet, mathematical certainty. A point where promises exceed reality, where confidence thins like worn cloth, where the machine can no longer extract enough from its people to sustain itself. That point is inevitable. But what happens after? What rises from the ruins? That part is still unwritten. For generations, we were taught to fear collapse. We were told that if the financial order ever faltered, civilization would fall with it. But history suggests the opposite. When an old system dies, it is not the end. It is a release, a breaking of chains we forgot we were wearing. Today, the signs are unmistakable. Governments drowning in deficits they pretend to control. Households leaning on credit to survive another month. Corporations rolling their debt like gamblers doubling down. A global economy propped up by injections of artificial liquidity that act more like painkillers than cures. We are living in a structure that must expand or implode, and expansion has reached its limit. But inevitability is not doom. It is clarity. Because once you understand that the system cannot be saved, you stop trying to save it. You start preparing yourself instead. You shift your focus from the collapsing architecture to the foundation beneath your own feet. You recognize that in every historical turning point, the individuals who survived, who thrived, were not the ones clinging to the old rules. They were the ones who understood the new ones before anyone else. The first new rule is simple. Money created from nothing can vanish into nothing. Savings held in decaying currency dissolve quietly. Debts inflate until they chain your future. The system's promise of stability has expired. You cannot rely on it anymore. The second rule: real value survives. Land, skills, knowledge, tangible assets, productive abilities. Networks of people who exchange trust instead of interest. These are the lifeboats that outlast every sinking empire. The third rule: understanding the game frees you from being a pawn in it. Once you recognize how inflation steals from you, you fight back by reducing dependency. Once you see how credit traps you, you build buffers. Once you understand how the elite accumulate during crises, you position yourself to avoid being harvested. The inevitability of collapse becomes the inevitability of transformation. For the first time in generations, individuals, not governments, not banks, have access to tools that shift power downward. Decentralized technologies, permissionless systems, alternative stores of value. The same institutions that created the trap can no longer fully contain the escape routes. But the greatest weapon you possess is not technological. It is awareness. Because they need you asleep. They need you overwhelmed, distracted, obedient. They need you believing that the system is too big to question and too permanent to resist. They want you hoping for rescue instead of building resilience. The moment you stop believing their story, their control fractures. This final stage of the narrative is not a warning. It is an invitation. The debt machine will reach its mathematical endpoint. The question is whether you will be crushed with it, or whether you will step out of its shadow before it falls. You are not powerless. You are not doomed. You are not destined to repeat the fate of those who remained blind in past collapses. The old world is ending. Something else is beginning. And for the first time, you get to choose which side of the line you stand on. The system that keeps you in debt forever is nearing its final chapter. But your story, your escape, begins now.